SCHD or JEPQ. I've collected all of the data over the last 3 years for both and simulated this, and the results will shock you. Both of these ETFs, or exchange traded funds, have gained a ton of popularity online, but it can be hard to compare them since JEPQ is focused on monthly dividend income, while SCHD aims to provide long-term dividend growth. To compare these ETFs, we will review key investing metrics, such as their past and current performance, dividend payments, price appreciation, and a side-by-side comparison to see exactly what could have happened if you invested $10,000 into each of them 3 years ago. Let's take a look at our first competitor, SCHD. This fund is owned by Charles Schwab Asset Management and is branded as the Schwab US Dividend Equity ETF. Its primary objective is to track the Dow Jones US Dividend 100 Index. The fund's strategy focuses on providing steady quarterly dividends while offering potential for long-term growth. SCHD has a low expense ratio of 0.06%, meaning you'd pay about $6 in fees for every $10,000 invested. It currently offers a dividend yield of 3.5%, and over the last 10 years, SCHD has built a strong reputation for reliable dividend payouts and consistent dividend growth. This has made it a top choice for investors seeking steady income alongside price appreciation. When reviewing SCHD's holdings, its top sectors include financials, healthcare, consumer staples, and other industries known for their stability and income-generating potential. Some of these companies within these sectors include Pfizer, Coca-Cola, and Chevron. Now let's compare SCHD to one of its competitors, JEPQ, focusing on their strategy and appeal to dividend-focused investors. This fund is owned by JP Morgan and is branded as the Nasdaq Equity Premium Income ETF. Its primary objective is to generate distributable monthly income by implementing out-of-the-money call options on the Nasdaq 100 index. This strategy has resulted in an impressive yield, which is currently sitting at 10%. Launched in 2022, JEPQ has quickly gained traction among dividend investors thanks to its focus on providing monthly income and its competitive management expense ratio of 0.35%. This translates to approximately $3.50 in fees for every $10,000 invested. The fund's holdings are heavily concentrated in the technology sector, which makes up about 40% of the portfolio. This is followed by significant allocations to communication services and consumer discretionary sectors. Top companies within this ETF include industry leaders like Apple, Nvidia, Microsoft, and Amazon. So now that we have an understanding of what each fund is about, let's dive into how they have performed over the last few years. We're going to break down the key factors such as the total return, dividends paid, and price appreciation. To make this comparison as accurate as possible, the simulation will start from 2022, which is when JEPQ was launched to track their progress over time. Let's see what the numbers show. In June, JEPQ was trading at about $48.50, and a $10,000 investment would have purchased approximately 206 shares. For this comparison, we'll assume that all dividends are being reinvested back into JEPQ, and by the end of the first year, so June until December, the total return would have actually been negative. The overall loss is about $200, although the dividends would have returned nearly $700. But the share price dropped from $48.50 down to $44, which accounted for most of these losses. In year 2, which is now 2023, there was some significant movement in the fund. The share price fell as low as $40.85 before recovering to nearly $49. Dividends continue to accumulate monthly. By the end of 2023, the total return on JEPQ had increased to $2,145, with about $1,900 coming directly from dividend payments. This means that just 2 years into this investment, the total return could have been around 21%. In year 3, or 2024, the share price peaked at nearly $53 per share before dropping back down to around $46. By the end of the year, the total return stood around $2,686. The dividends contributed to approximately $3,100, which means that the shares are down about $500. Now let's take a look at how SCHD could have performed in this same time period. Since we started our comparison with JEPQ in June 2022, we'll assume that the $10,000 investment into SCHD begins at the same time. So in June 2022, SCHD was trading at about $23.63 per share, and a $10,000 investment would have purchased approximately 423 shares. By the end of this year, SCHD's price would have now risen to around $25 per share, contributing to a total return of $1,033. Of this amount, 293 would have come from those quarterly dividends. Moving into year 2, SCHD's price would have slightly decreased from $25 a share to $24. However, the dividends continued to roll in on a quarterly basis, which pushes the total return at the end of year 2 to $852, and nearly $740 comes directly from those dividend payments. Finally, in year 3, SCHD would have appreciated from $25 a share to $28 per share. And by the end of the year, the total return would have reached $3,100, with about $1,100 coming directly from dividend payments. So after 3 years of this investment, SCHD's total return could have been around 31%. Now, taking a look at some graphs comparing the total return, we can visualize this past performance of both JEPQ in the blue and SCHD in the red. The total return accounts for both the price appreciation and the dividends. First, focusing on JEPQ, we know that the fund is designed for monthly income. As we move further in time, we can see that its total return is steadily increasing. In comparison, SCHD shows more consistent growth, driven by both the price appreciation and dividend growth. As of early January 2025, we can see that SCHD slightly outperforms JEPQ over the past 3 years. It will be interesting to see exactly how both of these funds perform moving forward, but no one can predict how either of them will do in the future. If you did enjoy this ETF comparison video, be sure to check out my channel as I've done several comparisons that you may find interesting. As always, if you enjoyed the video, be sure to like and subscribe, and thanks for watching.